First, negative gearing. Now we've got negative interest rates in Australia. Guys, welcome to the Property Fast Track Weekly Newsletter number 5. Well, the idiocy just continues, and I guess it was to be expected, but hopefully this new idiocy will wake people up from their trance. My name's Mike Tobin, and I'm back again to share with you tips and ideas to help you get started in property investing and to help you get onto the Property Fast Track quickly and safely as possible. Now, as with all the information shared in my weekly newsletters, it's of a general educational nature only. It's not intended as investment advice. Please consult your financial advisor before making any investment. Negative interest rates are here, down under, here now. Guys, you've had people in Australia believing that negative gearing is the way to go for years and years now. People have been conned into believing that the way to invest is to lose money every month, month after month, after month, so they can claim a deduction on that loss. And then they hope that when they finally sell in 5 years or 10 years time, that they'll find someone sillier than they are to buy their property for more than they paid for it. That's what negative gearing is. You lose money from day one, hoping and praying you make money when you sell. Not smart business in my book. Smart business is making money from the time you buy. Anyway, you all know how I feel about negative gearing and negative cash flow. But now the latest bonehead idea is negative interest rates. Negative interest rates is where you pay someone else to borrow money from you. But the only person reporting on this is Simon Black at sovereignman.com. Here's a link to his article. So go to sovereignman.com, have a look at that. Now, you may have heard that there are negative interest rates in countries like Germany and Switzerland and Denmark and Japan. And hopefully you thought, how stupid! How could anybody be so dumb? How could people invest $10,000 in the bank knowing that at the end of the year it would be worth $9,975 or $9,950? And hopefully you thought, well, Australians would never be that stupid. Well, guess what? I was wrong, you were wrong. Here are the tender results for the issue of Australian Government Treasury Index bonds from Tuesday, April 14. So 4 days ago. And the link's down the bottom of the page there, the aofm.gov.au. So, the series offered 1%, 21st November 2018. There were 47 bidders. 47 investors were willing to pay the Australian government to borrow money from those investors. Now, who are these clever investors that are doing the bidding? Guess what? The brains trust of investors. They're your banks, your large institutions, the people who are supposed to be safeguarding your money. I bet you sleep way better now that you know how well your money is being looked after. 47 investors participated in the Australian government's $200 million bond tender. The participants typically bid the amount they're willing to pay, and the highest bid wins the auction. In this case, and for the first time in Australia, every single one of the 47 bidders offered a price so high that it was negative. So we've got total successful bids, 13. Total allocated bids, 9. So 34 of the bidders didn't even get a look in, even though they were negative. And look at this, the best bid, negative 0.085%, and the lowest bid was 0.05%, negative 0.05%. So every single investor was guaranteed to lose money. What's really bizarre about this particular issue is that these are index bonds. These are inflation-linked bonds. This means that if the official government numbers show that inflation's falling, the bond could even become more negative. Is this smart investing? Is it smart to pay someone else to borrow money from you? Do you think this is all going to end well? And look, if you're in negative cash flow real estate, you are going to be in for the ride of your life. You're going to be ripped up one side, ripped down the other when this all falls apart, which it's got to fall apart, but when? Who knows? It could be tomorrow, it could be 2 years' time, it could be longer. You've got to get into investments that make money and protect your capital. Best investments that I know of are positive cash flow properties in well-established towns and suburbs. So, the lowest accepted bid, negative 0.85. The highest accepted bid, negative 0.7%. So what about the guy who goes back to his boss and says, sorry boss, we lost the auction, we weren't successful. And the boss says, hang on, we were offering negative interest rates, we must have won. Nobody else would be that stupid. Well, he was wrong. So this guy gets hauled over the coals because he offers a negative interest rate and it's not negative enough. Does this sound insane to you? If it doesn't, stop watching now, go somewhere else. Go and watch the Kardashians. Go and watch Game of Thrones. This is lunacy. Wake up. This is guaranteed to lose money. Okay, rant over. Let's have a look at the markets today. So this is Heron Todd White's property market indicators from their month in review for April. Sydney and Darwin, peak of the market. Are you going to be buying there? I'm not. Melbourne, Brisbane, Canberra, all in rising markets. Melbourne's near its peak. Am I buying there? No. Brisbane's been rising for about a year. Maybe, maybe not. Canberra, it's only just moved into a rising market. Maybe a good place to buy. What about Adelaide and Hobart? Am I looking at there? Yes, I am. These are in the beginning of their recovery. And Perth, declining market, it peaked a couple of months ago. No, I'm not going there until it bottoms out. So, that's it for this week. If you haven't checked out my free webinar on how to make a full-time living thanks to positive cash flow property, register at www.thepropertyfasttrack.com/webinar. The world is changing in a big hurry. Most of it behind the scenes. Most people don't know what's going on. If at any time in history you need to be financially literate, now is that time. I'm Mike Tobin. Thanks for tuning in. Until next time, happy investing. Bye now.